Welcome back. I'm Pratap here. Today is 20th March 2024. In this video, let us evaluate the performance of high liquidity zones generated in our yesterday's report. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos I kept in a playlist, supply demand zone price action course, at our NeoStock YouTube channel. Even I have provided a link to this playlist in this YouTube video description. You click on the link, you will get into this page and then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new YouTube video, we will provide an update in that channel. Now let's get into analysis discussion. Yesterday we have identified 8 high liquidity zones from daily time frame and 75 minutes time frame. So out of these 8, 2 stocks are triggered, but one we didn't take the trade, that is a Z Limited. Why, I will explain once we get into that. And we got another trade, successful trade in Nifty Mid Cap Select. So this is another indices available for trading purpose in F&O segment. In F&O, 4 indices are added. One is a Nifty, Bank Nifty, Fin Nifty, and mid cap Nifty. That is Nifty Mid Cap Select. So this is a 75 minutes high liquidity zone. Let me show you how our software identified this stock. So this is a rally, 3 base candles and a rally candle. This is what the high liquidity zone identified by our software. So what we did, as per the high liquidity concept, we have to fine tune the zone till the 5 minutes time frame, and the fine tuned 5 minutes we need to take a trade. So for that, what I did, I went to 15 minutes time frame, and inside that 75 minutes we identified a 15 minute zone. So here we have a drop candle, 2 base candles and a rally with follow through candles. This is the way we identified the 15 minute zone. Inside the 15 minute zone, I identified the 5 minute zone. So let me change the time frame to 5 minutes. So here we identified a leg-in candle, rally candle, a base candle, and again a rally with follow-through candles. So this is an excellent zone, a fine-tuned. Here we have institutional order flow. This is how we identify institutional order flows in high liquidity zones. Not only high liquidity, any zone, you can use this technique from your entry time frame till 5 minutes. If you fine-tune, if you are able to identify excellent 5 minutes order flows, mostly the zone will get higher success rate. I'm saying higher success rate. But high liquidities are having more success rate. At least we have more than 80% success rate. That is what we've been observing for the last 6 months. We took several trades during last 6 months. Even yesterday, day before yesterday, the entire month we have seen. Those who joined in the channel few months back, they've been seeing the same for the last 6 months. See today what happened? Prices came, just reached this, see the rejection and then the follow through. What is the target? The 15 minutes could be our target. But here the problem is, look into the 15 minute zone. Where are the 15 minutes? We have, this is the only valid 15 minute zone. This is a huge target. It is impossible to reach. You know, this will be more than 15 or 16% ROI till this 15 minutes. Expecting such a big ROI, especially in index stocks, is not practical. And here, this is a rally candle. See the hidden gap, rally candle and drop candle. So it's not possible. So where we need to target? Maybe I thought maybe this is a violated zone. Maybe somewhere here I thought initially. It was my initial expectation. Actually it reached. But okay, it reached later stage. But that is not important here. Here I observed prices keep on moving in this area and coming down. If you look into the 5 minutes, you get better clarity. See here. And already here is a rejection in this candle. So that means lower time frame probably there could have been some orders captured here. Again orders are captured here. Again orders are captured here. And that created some kind of interest in this area. Rejections is always an important price action clue. So what I did, I went to 1 minute time frame. So when I looked into the 1 minute time frame, see here you have a drop-based drop. See earlier how it prices went and picked up the orders, and see the big move until this zone, high liquidity zone. And today what happened? Again it reached. But my expectation is okay, this will be violated. But it didn't happen. Again third time also. Maybe I thought maybe third time. It didn't violate. Now I got some kind of clarity. What is that clarity? Maybe this could be a 1 minute high liquidity zone. See, I'm saying maybe. I'm also not confirming. The reason is it is impossible for the human to identify this as a high liquidity without the help of the software. Even I cannot. I can only assume, at least based on my experience, and moreover I have written the algorithm, at least 70 to 80% level, I may assume this could be a high liquidity zone. But software has to confirm our high liquidity zone. Especially S_DZ and R_SZ high liquidity zones. They work very well. They are the highest priority high liquidity zones in lower time frames, especially daily and below time frames. And here I got some kind of clarity, maybe. See, there are higher chances that the price may fall from here. That possibility is also there. Maybe it was violated, that is a different story. What would happen if it come down and reaches your entry level again? All our profits would have been gone, right? So that's why next time when the price is entered, immediately I alerted you people in our group, in our Telegram group. I told you book the profit. And later on again, see here again came down. What would have happened if prices would have come down further? You cannot do anything, right? But okay, after that this zone is violated. Further went up. But where is your target? Where do you fix your target? You won't be having, see how prices came down after that again. So this is the right area where you need to exit. Because this is the one, keep on holding the prices. When your 15 minutes target is too far, it is impossible to reach during the intraday, then definitely this is the right exit point because it is strongly holding the prices. And moreover, it already reached your average ROI. By the time prices entered here, it reached your average ROI. It gave more than your average ROI return. So how much profit it has given? So it has given today 7,335 rupees profit, which is 8.5% ROI, return on the investment, as per one futures margin cost. The margin cost is very, very less for this mid-cap Nifty. It is around some 75,000 or 76,000. If you are having a capital, say for example, around 2 lakhs, maybe you would have brought to lots today. That way you would have got maybe around 14,600 rupees profit you would have got. This is what I am calculating here is only one futures lot. What is the profit and what is the ROI? So it's an excellent, it's more than our average intraday ROI for our high liquidity zones. Our average ROI is 6.1%. Especially this last 1 week, we are getting a very good ROIs for all the trades because of the volatility conditions in the market. So this is an excellent trade, successful trade today. And the second one, Z Limited, we got a trade but we couldn't take. Let me show you. And this is a 75 minutes high liquidity zone. See, prices went inside this 75 minute zone. After that, see the move. And it reached in next 75 minutes, supply also it reached. Here. Even the next supply also it reached. So it has given a good profit, but we couldn't take the trade. The reason is data availability in trading view. See, this is a 2020 75 minute zone, 2020, year 2020's high liquidity zone. This is what our software identified. Rally, 2 base candles, and this is a rally candle. You might be thinking this is a small rally candle, but this is good enough to consider because this candle is very big. This is looking like a small candle. Visual representation. Anyway, this is the area, but you cannot fine tune. The reason is 15 minutes data is not available, even 5 minutes data is not available. Maybe there is a possibility you may ask our NeoStock's supply demand zone chain, at least we can guess some trades. But my intraday data is also available from the November or December 2020 onwards. Before the data is also not available, intraday data. But daily and above, my data is available from the year 1994. I'm talking about intraday data. Because my database data is also limited, especially intraday data. Even I cannot help because this zone is August 2020. So that is the reason why we are not in a position to take any trade. We have to leave, no other option. When data is not there, you cannot do anything. You cannot fine tune the zone. Without fine tuning the zone, you cannot find the entry because the risk reward, everything will be depending on how you fine tune. But anyway, based on this, we should think at least this could have been a successful trade, but we couldn't trade. So let's leave that. But one point we are understanding, it gave a good return. 20 points nearly from here, somewhere here. This is 130, 138 or say 139. From 139 rupees till 143 rupees it went. Sorry, 4 rupees. 20 rupees is some other stock that I will be showing you later. So it's a good profit. It's over 3% profit. Then imagine how much it could have been in F&O. Into 4 times your profit margin. So anyway, Z we cannot fine tune. We have to leave this stock. And the next one, you would have got a trade not based on your high liquidity zones concept because we didn't get an entry, But I already explained you in lesson 17, zone confluence. Even yesterday we discussed the same thing. The based on the, not zone confluence, I'm sorry for my mistake, EMA confluence. Based on the concept EMA confluence. Let me show you. This is another example for the concept EMA confluence, how powerful it is. EMA confluence, clearly I told you, below daily time frames, you cannot use EMA 20. But lower time frames can have higher time frame EMA confluence. Lower time frames can have. What is the immediate higher time frame EMA confluence? You can look for daily EMA confluence. Daily. So go to the daily time frame. See here we have the EMA, price over extension. See here, yesterday also I told you this. Prices came down and here over extension is completed. I already explained you over extension will be completed in two ways. I don't know how many of you still remember. But as a revision, let me tell you. Because it is a powerful concept, EMA confluence. Over extension can be completed in two ways. The first way is prices will be moving in a narrow range for a long period. Here only they will be moving, and over a period of time slowly EMA comes to your prices. That way EMA confluence will complete. But we never get trade opportunities in such kind of situations. But a second approach we will get trade opportunities. What is the second approach? There is a overextension. Then you can see a correction in the market. Correction means prices will be moving against the primary price direction. Here what is the price direction? Towards the down. That means bearish. But market moved bullish. How long? Till where it will be moving in bullish way? Till the EMA. This is the way you will be getting trade opportunities. Where we get the trade opportunities? Near this EMA, when prices are entering lower time frames, if there are any zones, in those zones you will be getting trade opportunities. Because the lower time frame and daily EMA is having confluence. Lower time frames can have confluence with higher time frame. Please remember this point. You cannot look for 75 minutes EMA confluence in 75 minutes time frame or below. You cannot use 25 minutes confluence in 25 minutes time frame and below. Because the limit we have given is daily EMA. EMA should be used daily and above. You cannot use below daily. But below daily zones can have EMA confluence with higher time frame EMA. That means 75 minute zone can have daily EMA confluence or even weekly EMA confluence. Similarly, 15 minutes or 5 minutes can have daily EMA confluence. Let us limit to daily EMA confluence when you are moving lower time frames like 15 minutes or below. So because this is a daily EMA confluence, let us check whether there is any 75 minutes confluence in this area. So let us draw a horizontal line to understand where exactly EMA is there, so that we can remember. TradingView also supports, you can view higher time frame EMA in lower time frames, but I don't recommend you that. The reason is lot of clumsiness will be there in the charts. That's why just marking this blue color line, that is a good choice. Now go to we have two lines. Two lines. So maybe this is the one I have drawn yesterday. Okay, fine. Somewhere here. Okay, near the blue color line, you can see a little above or little below, anything is acceptable. Here you have drop, base candles and drop candle. But this is almost like a ERC candle, failed ERC, but okay, time being. This is the area you have, 75-minute zone is there. Inside that 75-minute zone area, that means blue color area, check if there is any 15 minutes or 5-minute zones are available. Check here, you have a 15-minute zone here. So inside this, see, this is already 75 minutes is there. Inside again you have 15 minutes area. Within 15 minutes area, is there any 5 minutes to plan your trade? So go and verify in the 5 minutes time frame. Remember, this is not high liquidity trade. This is EMA Confluence based, I am telling you. I already explained in our EMA Confluence, but this is another live example today. Even yesterday also. Yesterday I didn't explain in a detailed way, but I gave you an overview. 5 minutes you can specify here a zone. See, this is your 5 minutes area. But leg out is not really great towards the down. So that's why it's concerned me about this 5 minutes. Okay, anyway, we have a zone, but I want to find even more fine-tuned order flow, That's why what I did, because 5 minutes and 15 minutes are almost looking same. Same means almost the risk is almost same. A little low, but it's a bigger risk. So that's why what I did, I want to fine-tune and I want to identify the real order flow. So that's why I went to 1 minute. In the 1 minute, we have a good order flow here. We have a drop, base, a drop, follow through candles, and prices came near to this zone, see the rejections. Is it good enough to take the trade? Yes, it is good enough to take the trade. And moreover, this is working like a high liquidity zone, but it is not high liquidity. I am saying working like a high liquidity. Maybe it can be high liquidity. Maybe it can be. Because we need only software confirmation. Ours is only a guess, a wild guess, whether it could be a high liquidity zone, if it is having several tests earlier. We can consider this as a test here, just a small gap below. That anyway, that is good enough to take the entry. That gap is good enough to take your entry. Just as maybe 5 paisa, 10 paisa gap, that's it. This is yesterday, see here. Yesterday also it maintained a small gap. That means this is, see, somewhere here you will take your orders like this. If you add some 0.1% buffer, your entry will come somewhere, the first blue color area, the top one. Moreover, this risk is very small, very small. Even if you from this blue color area till the digital line, risk is very small. That you will understand once you move to 5 minutes. Because 1 minute level, it is looking like a zone having good width. But this is 1 minute zone, that point you should not forget. The moment you move to 5 minutes, the width looks very small. So calculate the width from this blue color line I have drawn till the digital line. The moment I move to 5 minutes time frame. So this is yesterday again it gave. That means a very strong order flow is here. Moreover, EMA Confluence is there. So institutions, they all set ready with their order flows. Once the price overextension completes, they want to push the market down. How they push? That is their wish. Maybe it could be intra-level entries they may profits they may expect sometimes. Sometimes they may expect DIT profits, sometimes they may expect WIT profits. But time being we are getting intraday profits because we are trying to understand these concepts from the intraday point of view. So we got the profit. Now I'm changing the time frame to 5 minutes. See how small this zone become. Even if you consider that the first blue color line, the top blue color line, till the distal line, still the risk is very, very minimal. And the one below is the EMA Confluence. And because the overall distance is very small, you can consider this entire 1 minute is having EMA Confluence, very close to that. This is how generally you plan your trades. You know what normal traders will do at EMA, they plan their long orders or short orders. Just EMA, they don't bother about supply demand zones because they are not aware. But why we are looking for supply zone or demand zone? The reason is we want exact entry, we want exact target, we want exact stop loss. Based on that only we will be in a position to calculate our risk and reward. Our entire risk management we need to implement properly. If the risk is high, we don't take the trade. If the risk is manageable, we will accept the risk and we will take the trade. But normal people, normal technical analysis traders, they are not aware of these concepts. They blindly they trade at the EMA line. That's it. If something goes against, they get huge losses. But if our analysis goes wrong, we get very small loss, manageable loss. Still our capital will be protected because we are getting a very minimal loss within the risk accepted level. That is the difference between demand and supply zone traders and normal traders when we both are trying to plan our trades based on the EMA. Here we are looking for EMA confluence with the zone. There is no concept like EMA confluence for the normal technical analysis people. See, today again it would have been another successful trade for you. See the rejection the moment it came. How much profit? 20 rupees, sir. From here to here, somewhere around 20 rupees is there. Anyway, here I am not calculating how much profit we got, how much ROI we got, because our goal is only about the high liquidity zones. But still why I am discussing, because all these topics you learned in your course. Not only the high liquidity zones, the other concepts also will give you profits. That is what you should understand. But the reason why I am mainly focusing high liquidity zones, because they are giving more return on the investments on a consistent basis, And every day we get trades. This is also would have given a good profit, almost equivalent to what we got in high liquidity zone. But it may not happen every time. Today it happened. It would have reached 15 minutes target today. So where is the 15 minutes target here? Somewhere here. Yesterday also it reached the target. See, this is yesterday's trade and this is today's trade. So those who would have planned your trade based on the concepts you learned in your lesson 17. I think EMA is lesson 17. Please correct me. Yeah, EMA is lesson 17. Lesson 18 is odd enhancers and current ongoing lesson is risk management. That is lesson 19. Yeah, in lesson 17, we discussed about EMA Confluence, all the concepts, all these strategies I explained to you. Whatever I explained, same thing executed and you got the trade. But this is not a high liquidity trade. The reason is our high liquidity zone is just above that. But this zone is not letting the prices go above. So until this zone is violated, this 1 minute order flow, I think that is looking like a 1 minute high liquidity zone because it's strongly holding the prices. See, the manually you can identify high liquidity zones just by guessing, that's it. We can't confirm. By the time you guess, how you guess? Because multiple tests are happening. Maybe after third test or fourth test, you may confirm, maybe this could be a high liquidity. By the time it is too late, maybe the next time it will violate and it will go up. Before all these opportunities, we missed it. But a high liquidity zone algorithm identifies even fresh zones also as a high liquidity zones. That is what we have seen. Some people are asking me how to identify those zones. Even I don't know how to, even if you ask me identify, I cannot identify. That's what I am telling you. It is impossible to identify manually. Especially all those fresh zones. If it is testing multiple times, based on multi-testing, at least 80% we can confirm. 80%. We can confirm this could be a high liquidity zone. Could be. That is the way we are guessing. But by the time it is too late, because we miss many trade opportunities. Fourth time also it might be successful. Fifth time also it might be successful. We never know. Maybe fourth time you might think it is going to be successful. You will take a trade, it will stop out. That possibility is also there. So that is the reason why it's not easy to identify high liquidity zones. If people keep on asking me about this question, because I have seen a question in in our comment section. I thought of addressing in the next Q&A. But anyway, I'm explaining in this HLQ analysis video. I don't know if that person will be listening this video or not. I'm not sure. If at all, let me tell you, if you want to identify high liquidity zone, including me, I'm telling you, the only way is after completing several tests, at least maybe the third test or maybe fourth test, we can guess. That is 80% accurate level. It may not be 100%. Our guess might be right or it might be wrong. Because multi-test is happening, generally where multi-test will happen at high liquidity zones. So that way we guess maybe it could be a high liquidity zone. 80% our guess could be correct sometimes. 20% is a unknown area we may not be knowing. But the algorithm is different. That is a complicated, several checks. That is from old data onwards it has to do. Because I have a daily data from the year 1994. Since then it will be analyzing the data. You may ask intraday, we have only last 5 years data. But still okay, 5 years, but so many candles are there, 5 years. 5 minutes, see, imagine how many candles in a year. More than daily candles from the year 1994. From the year 1994, so far, maybe 7,000 candles or 8,000 candles will be there. But last 5 years, if you look into 5 minutes candles, that could be more than 30,000 candles. So more candles are there, more accuracy will be there for that concept. High liquidity zone. If you want to know exact how our algorithm works, I have to reveal my algorithm to you guys. But you are traders, you are not software people, right? Why you want that algorithm? Even if I explain, you don't understand. And moreover, this channel is for traders' point of view, not software developers. Anyway, software developers also, this channel will be useful very soon, because I am also planning to share my complete Java software knowledge, because that was my long goal. Actually, I started explaining a few sessions. I created some channel, I don't know, even I forgot the name. During the COVID time, I gave some 1 or 2 training lessons I completed. Immediately after few days, the COVID started and lockdown, a lot of disturbances, no mood to continue. And finally I forgot. And I fully focused on in my this software development. So I left it. I gave low priority. But anyway, with this channel, for those people who are interested to learn Java programming, I'll be explaining once we complete this our training programs. Because I don't require to prepare all the presentations. For you, the problem is demand and supply zone. For preparing your presentation, many times I am taking, for especially training lessons. For preparing one presentation, it is taking almost a week time for preparing one presentation. Because all my ideas I have to put in the presentation so that you should understand them. Because my way of understanding, if I explain, you mostly you don't understand the concepts. In your understanding level, my experience, I have to make it reflect in the presentation. That's why it is taking a week time to prepare. But my Java related presentations I prepared in the year 2008 itself. I have all the complete all the presentations. The same way how I am explaining you the concepts in adding some animations in the concepts, so that you step by step you people understand. The same way I prepared all my Java presentations in the year 2008. They're all available. Only thing is just maybe 1 hour every day I need to get the time to record the video. That's it. So the daily one video, I can at least programming related videos I can present. Maybe if any of you are interested to learn programming, you can learn. Or any of your family members or friends, if they are studying engineering or looking for the jobs in software, they all can attend these training lessons. I will keep in a separate playlist. I will also create a separate Telegram group also for them. I don't want to mix you guys and those people. So once your training programs complete, I will plan that. No hurry in that. First priority I am giving to you guys. Okay, but anyway, let's get back. We are deviated from here. So we guessed, because keep on this zone is holding the prices, we are guessing it could be a high liquidity zone. This is the only way at present you can do. If anybody wants to know whether it is a high liquidity, but remember this is only 80% accuracy. We cannot, because sometimes some stocks support multi-testing, but they won't be recognized as high liquidity zones by our software. Because some of it conditions, software algorithm conditions, won't met to consider them as high liquidity zones. That mistake will happen. That's why approximately at least 80% accuracy level we are guessing, including me, even I am doing that. That's why many times you might have observed, I am saying it could be a high liquidity. I am not saying it is a high liquidity zone. It could be a high liquidity. That means there is a possibility that it is a high liquidity. But I am not giving guarantee that it is high liquidity. The moment I say it could be, I am not giving guarantee. There are chances that it could be. If I say it must be, then 100% guarantee it is a high liquidity zone. I have doubts. 20% confidence is not there. But 80% okay, I can say. Because order flow it is strongly holding multiple times. Maybe here first time, here second time, here third time, today fourth time. That way I am confirming maybe it could be a high liquidity zone. That is the only way you people can do. Especially those who are asking me how we can identify high liquidity. But you cannot identify fresh zones. Even I cannot. By analyzing the chart, even I cannot tell it is a high liquidity zone. Whatever algorithm rules I defined, I have to analyze from the year 1994 till the date. Then I can maybe do according, because I wrote the algorithm, I remember software rules. Accordingly, if I do checks, if I spend several months of time for analyzing the data from the year 1994, it will take several months. After several months, I can tell, okay, this is a high liquidity zone or this is not a high liquidity zone. I don't want you people to waste several months' time. That's why follow the software anyway, you are getting free reports. If the other way, only thing is, after several tests, you can guess it could be a high liquidity zone. Please remember, this already addressed the same explanation I have given in one of our Q&A sessions. You are not following earlier Q&A sessions and asking same questions again and again. If your question is related to how to identify a fresh high liquidity zone, The answer is even I don't know, even I cannot identify. Even I cannot identify by looking into the chart. It is impossible. That is what I am saying. It is impossible to identify. We need to take the help of the software. Human point of view, it is impossible. We cannot spend 6 months' time for identifying one high liquidity zone. Hope you got clarity. Okay, how much profit we get? You please calculate. I am not doing this for this stock. The reason is I am focusing only high liquidity zones. Please do this calculation. You draw on the chart. See how much profit you would have got. And which concept is giving this profit? EMA Confluence. Lower time frame EMA is having confluence with daily EMA. Because I have seen one of the persons, he concluded that below the time frames we cannot use EMA. Below time frame EMA you cannot use. You misunderstood that concept. Even yesterday I replied to repeat the video, lesson 17 once again. The mistake you are saying, actually you are summarizing in the comment section you are putting. If somebody read your comments, they think this is whatever you said is correct. That danger is there. Be careful. So what you told in your explanation, below daily EMA confluence should not be used. That is what statement you have given in your comment section. Actually, what your understanding summary you kept in the comment section. So that point is very wrong, dangerous point that is. Below EMAs, daily below EMAs you should not use, not EMA confluence. I clearly explained in my video this point. You cannot use below daily EMAs, not EMA confluence. There is a difference between EMA and EMA confluence. EMA confluence you can use till 5 minutes, even 1 minute also you can use. But they can have confluence with daily time frame and above EMAs. But 1 minute cannot have 1 minute confluence. 1 minute cannot have 15 minutes confluence. Or 5 minutes. So 5 minutes cannot have 15 minutes confluence. 5 minutes cannot have 75 minutes EMA confluence. But 5 minutes can have daily EMA confluence. Is it clear? So be careful. When you are learning the fundamentals, you have to carefully listen the concepts. That's why always I am suggesting you people, repeat the video second time if possible, third time also. Then you note down the points. That way you get complete clarity. Because I explained each and every point, my knowledge level I am explaining. But you have to properly listen. First time, I see, this is expected. First time when you learn, you make mistakes. That's why we have to listen the video again. Okay, this is about JSW trade based on EMA confluence, but not a high liquidity trade. So I am not maintaining this trade profits in our Excel sheet. My Excel sheet focuses only on HLQ zones. HLQ zones like aggressive trades, price action close, or HLQ trades based on bull trap or bear trap, or HLQ trade based on the fine tuning the zone. All these concepts. Anyway, all these concepts I will be explaining in detail in our lesson 21, the third phase of our training program. That is the first lesson. Most probably by this weekend we may complete. During this weekend we will complete phase 1 training program. We have 2 more videos pending. One is lesson 19.3 and the last video lesson 20. Okay, next one is and remaining trades. How many? Z we have seen, Nifty, it is a successful trade, and JSP. And remaining, let us look into them. Aurobindo Pharma we already fine-tuned in one of our earlier videos. The same zone only. I didn't make any changes. Yesterday when I opened, same analysis came. That means I already explained this analysis in one of the earlier videos, because at the time we got a trade, successful trade. Probably you can refer on this 14th February video You can refer, because I don't want to waste time by again analyzing this. 14th February video, please refer, because that day only prices came here. Or maybe before one of these videos also, maybe I would have explained this fine tuning. Next one is Havels. Havels is a daily zone. Is it daily or 75 minutes? Havels is a daily zone, yes. Here we have, this is actually, is it a base candle? Please tell me. Is this a base candle? This is not a base candle. This is a leg candle. You may ask a question, how can you say it is a leg candle? At the hidden body, here there is a gap up. At the hidden body, the moment you add the hidden body, see how much body it is getting. Small wick, that's it. So it is a leg candle, 2 base candles and a rally candle with a gap. This is daily zone. Actually, this daily zone is inside 75, this daily zone is inside weekly zone. This daily zone is having weekly confluence. You want to see? See here, you have a rally, base, rally. This is weekly chart. Inside this weekly, this daily zone is there. And this daily zone is high liquidity zone. So what I did, fine tuned with 75 minutes. Here we have a drop candle, 1, 2, 3, 4, 5, 6 base candles, and again a rally candle with gap up. That means pro gap is there. And inside this 75 minutes, again we fine tune to 15 minutes. Actually, if you see here, you won't have a clarity on the 15 minutes. But see here, you have a zone, excellent zone. You have a drop, 2 base candles and a rally candle. And this 15 minutes is strongly holding the prices. Each time it is giving rejections and holding the prices. There is a strong order flow in this area. Very strong order flow. It is holding 15 minutes candles. Below we have, inside 15, we have a 5-minute zone. See here, let me go to one important point I have to tell you. Because here, in this leg out, the candle structure is not good, I didn't leave this stock. I did a deep analysis here. Anyway, the trade didn't happen today, but see how I did my analysis. I have observed all these candles. Someone is holding all these candles. So that way I got the curiosity. I went further back, and here I saw drop base rally, 2 base candles and rally. And this is the main reason behind. So this is the fine-tuned 5 minutes area inside 75 minutes. Generally people see, look for a zone in this area because a long leg out is there. Maybe there is a zone, but your structure is not good. This zone will be violated. That is what we say generally. But I didn't do that. That kind of observation experience you should also get in the coming days. Now you got the clarity. Drop, 2 base candles, rally. Now let us get into 5 minutes time frame. See here, you have a drop candle, 1, 2, 3, 4, 5, 6 base candles and a rally candle. Type 2 proximal entry when we do exactly within this 15 minutes, this 5 minutes. And prices never reached this fine-tuned 5 minutes area so far. That means there is a strong order flow before the zone itself. Even here also, this drop candle also did not enter into the 5 minutes. So after that, with a gap up, prices came up. So probably this could be a strong order flow area in this 5 minutes area. Anyway, risk is also very small. Nothing wrong in taking a trade here. That was my expectation. let me go to the beginning. Someone helped me, one of our subscribers. The go up directly, it's saving the time. So today we didn't get the prices came into the zone, but they didn't reach the fine-tuned area. Even before itself it moved up. So this is about Havels, how we fine-tune the zone. Some learning you have from this particular fine-tuning the zone. REC Limited, already we fine-tuned this zone several days back. This is also a daily zone. Already we fine-tuned. Probably on this day, when 28th February, we might have discussed this particular zone. So please refer this video. You might be knowing how we fine-tuned this zone. But from this zone itself, a lot of rejections are coming each time, not allowing the prices to get into this. So anyway, we didn't plan a trade. And idea, I told you, skip this. I'm not comfortable with 5 minutes. Anyway, this is the stock coming continuously for the last 4 days. I think 3 days back or 4 days back, I explained, we fine-tuned this zone. I explained how we did and how we rejected this zone, because 5-minute structure is not good. And JSWSTEEL, we discussed SRF is one last stock. SRF is also a fine-tuned zone, and also we got a trade on 11th March. On 11th March video, please refer, because prices entered and it gave a trade on 11th. It's a successful trade for us. So please look into the 11th March video. Probably that is the day we discussed about this, if I am not wrong. If not 11th March, maybe it could have been on 6th March or 22nd February, because these price levels only near to this zone. So at the time we fine-tuned, I explained it here, because yesterday I didn't fine-tune this. The moment I opened the chart, this analysis came. So this is about the high liquidity zones generated in our yesterday's report, and we got a very successful trade. Nifty mid-cap select, the indices. Hope this analysis video is helping you to learn some new points, and some of the concepts we learned in our training course I have revised. And the high liquidity zones, whatever the questions you asked about how to find them, I hope I provided you the answer. So let's all meet again in our next video. Thank you.